All right, good evening, everyone. Welcome to the Trade Findings and Adjustments for February 25th, Tuesday evening. My name is Kevin Hurley. I'm going to go through this with you today. We have, there you go, 25 are now jumping in, so we're getting busier. In fact, it's amazing how many more people all of a sudden are joining the YouTube channel. Let me go over some positions really quickly, and let's just go from there. If you have the sprint bull call position, exit out of the trade. Just exit out of the trade. Target position. If you have the leaps or the covered call, you're going to look for an adjustment to add the 03 April 2020 $112 long put. You should most likely keep that short call credit. So it's now time to add your long puts on your target position. All right, leap bull calls on GE. I'll wait till January 21. Plain and simple. Future adjustment, right? Dollar cost average when the price gets to a whopping 35 cents. Costco, we're not going to do anything on that one. And Baidu, the long term, we're not going to do anything on that one. Baidu has earnings on Thursday. We have protected the stock ownership. We will probably cash in the June 2020 135 calls and push those farther out in time. Another idea for a possible trade. Let's see here. What am I trying to do? I am trying to, why do I not have it? For crying out loud, you think I'd have these a little bit better positioned and ready to go. All right, let me give me a second. Snap a screenshot of these. Thought I had them, but they're not. Come on. Sorry, guys. Technical difficulty, and unfortunately, that's on your user. I thought I would have had them ready to go. You know what? Actually, I'm changing this up. As I'm thinking, I'm going to change this up. All right. Let's go coronavirus and portfolio management. No change in the view of the economy, GDP, and economic revisions. What's missing out of that statement there? What's missing out of that statement there for no change in the view of the economy, GDP, and economic revisions? Someone please tell me. Good answer. In the US of A, right? There already are economic revisions occurring overseas. China's looking to have a down quarter, if not two. We have the epidemic taking off in Italy. They don't know where it came from. They've got open borders. They're looking at a Q2 and Q3 revisions for Europe slowing down. Kudlow came out and said, hey, other countries should be like the United States. They should start having cheaper taxes, easier ways through government regulation to get into business. And the problem is their economies are already slowed, if not stopping, whereas the US is humming along. So right now we still look okay, right? What did the CDC say today? Company of Disease Control or whatever they call themselves. What did their president, she said something today. There you go. Bingo. Said it's only a matter of time. So do I have Lee? I'm pretty sure I saw Lee, 27 of you. Lee, move out of California now. Dave W, move out. Well, I already moved out of California. Move out of Washington now. Kind of interesting. Obviously, we're going to go through a matter of time where schools shut down, public transportation shuts down, and more people work remotely, i.e., planes, trains, and gathering centers will be shut down. So, I've got Keeve here, and I'm not going to lose his confidence, but other than a couple swear words, he was honest enough to say, I'm kind of worried. I'm kind of worried. And as we talked earlier with the group, and then it was just him and I, really this morning was plain and simple. This morning was frustration, anger on my side, fear/panic. I should say fear/controlled panic, and the adding of protection. Pretty cool. Market was down over 800 points today, not quite 1,000, but the market was down significantly, and we cut our losses in half from the other day. And if we have one more down day like we had today, we should be able to make up over 75% of that downward movement. Now, the question is, how are you going to make up 75% of the downward movement? And how will you be profitable on the down days and make up losses, right? I think that's a question that everyone's asking right now. So let's do, before I answer that, question, let's do some vocabulary. Someone please tell me, what is a dead cat bounce? What is a dead cat bounce? Someone tell me what that is. Oh, it's coming in pieces. I know you wanted me to answer this. When you throw a cat off a building, it hits the ground and dies, yet bounces higher. Yes, that is a dead cat bounce, where the market is already dead. So I should say market is already dead, yet it bounces for a day or two to then continue the downward movement. Agreed. Bingo. Totally on board with it. And yes, you described what a dead cat bounce is to the T. I love it. Keeve, if you could type in what you're looking at on the cues so I can use it, please help me out there. All right, second understanding. The media to sell airtime is making this out to be the 1918 Spanish flu. So let me just make a comment there. Apparently our medication today sucks and is no better. Our health department, our hospitals, our doctors are no better and no smarter than they were in 1918. Just to let you know. So get ready to start drinking a lot of tonics. Number 3. This is spreading. And I'm not going to type this in, but I would like for you to listen and to take it with a grain of salt. I have a roommate in college that travels to China. And right now he is quarantined in Europe. And I get this call out of the blue. Hey, what's going on? I'm like, hey, what are you doing? He's like, oh, I'm quarantined. I've got 16 days where he's quarantined because he's coming back from China. And I said, really? In Europe, huh? And he said, yeah. He goes and buys businesses and invests and so forth. And apparently he is very well known within the circles of the Providence leaders. And I said, so how bad is it, you know? And his comment was he believes that the infected persons in China is 10 times what's reported. He believes there's about 700,000 people infected with the coronavirus in China. Thought, wow, that's pretty amazing. How do you come to those conclusions? He's like, well, I talked to all these leaders. I know what they're doing. I know this. I know that. He seems credible. My next question. So, what's the real death toll? And he goes, it seems to be about double what's being reported. And I went, huh. So instead of maybe 70,000 people in China, it's 700,000. Instead of 5,000 dead, it's about 10 or 11-ish. And the answer was yes. So I was kind of on a drive and I was trying to think of things. In fact, Keith thought I went up to Strawberry Reservoir and went fishing. And I'm like, no, I'm actually just driving. I just drive to get my head around things that I'm thinking about. It's just what I do. And that's where I put that little panic kind of set in for me. It's like, damn it, I should have doubled up on shares already. Excuse me, should have doubled up on protection already. Was there something I missed on Friday that I should have gotten that I would have changed what I did differently? Should I have protected yesterday and overpaid for everything for the drop down today? There was a lot of thought process that went into what I was doing. And the short answer is in all honesty, it's really only about twice as bad as the average flu. Average flu on average is about 0.1% mortality rate. The real mortality rate is not 2% to 3%. It's about 0.2%, especially if the cases are being hidden. And when you look at the mortality rate in more first world countries and third world countries, it's even less than the flu virus. So what we have is a bad case of the flu, but the difference is there's a 14-day incubation period. So this is spreading and will spread through Europe. I would dare say Asia, as it already has. And it's just a matter of time between South America. I don't want to put something in there about Africa because I don't know. I have no answers there. I've never been there. Middle East, I don't know. But it will spread through at least these areas because that's where the majority of the travel goes into China from the more wealthier people. Kind of funny to hear Jamie Dimon talk about all the Davos people who probably have been infected there, didn't know it, and are passing it around. We may see all the elitists die off. He kind of chuckled, that might not be such a bad thing. But it's going to spread. And most importantly, if it spreads through that areas, what's going to happen? Talking in ways of the stock market, or it's going to go down. I'm looking for something else, though. Rich, I'll answer that in a second. And David, I'll answer that in a second. Dave, correct. Lance, correct. We will have a global slowdown, which means, damn it, make it in the USA. Two comments that were just said. There could be worldwide fear, which is true, but that doesn't mean food shortages, which I think is what you're trying to say there, Dave. But it could. I won't rule that out. China is spending their time hiding the severity. Definitely. It's 10 times as worse. Twice the amount of people are dead. I would agree with you. We are attacking the problem should be a different result. I would agree with you on that as well. But we will have a global slowdown. And the worry will affect all markets no matter how strong the economy. So the comment from from Keith the other day was, well, why didn't we do this, or why didn't we do that? And in all honesty is, there were no signals or triggers that justified to protect everything last Friday. If you did protect everything last Friday, with all due respect, I'm going to say you're awfully damn lucky. If you went to cash last Friday, I'm going to say you're an idiot, because there was no singular trigger. You gambled. Now, I've had this discussion with someone else, because some of us are over leveraged in Boeing. And I said I don't gamble, and I'm going to stick by that. I don't gamble. The upside is so big on Boeing that I'm willing to be over leveraged in that company for a while. But I've got points where I'm going to sell out. So back to, what are we doing? Or more importantly, how do we make up losses and or make money to the downside? So first thing, someone tell me, what's the first thing we should be doing? First thing we do. Add a sheet load of protection. Well, but remember, you get a big up day, it kind of freaks people out. So I'll calmly disagree with you. There's a process to it. You don't add a load of protection on. First thing you do, pray for the bottom to fall out. It's simple, right? We have a 2008 opportunity called the coronavirus. So you use your same playing schedule from 2008 to today. An example, Visa. Big break. Good thing we protected it. But looking at Visa, the next drop is 180.55. So everyone with shares of Visa, and for crying out loud, I just had some reading glasses here. There they are, found them. Everyone with shares of Visa is going to have right here probably the 180-ish range. I'm going to say probably 180.25 or 180.40 are going to have a second set of long puts put into place. They will automatically be triggered if Visa goes down and breaks the 200-day simple moving average. If it does break it, it will most likely fall from 180 down to the 170 range. If we add extra puts on stock ownership, what does that do? What does that do? Rich, I'll get back to that question again as well. perfect. It creates a negative delta, which means you make more money than the stock loses. For every dollar, in fact, let's see if we can't make, use an example of that here. Disney's the first one it's probably going to happen to. So if I look at Disney, going down to our stock ownership positions here, we have 114,100 shares of Disney. We made up, well, take a look. Disney lost, for all intents and purposes, Disney lost $14,100 today. We made up $9,639, right? That's the way to take a peek at it. That's what we were basically doing today. So our delta is, taking a peek at the real numbers, if I take 14,100 divided by 9637, I did that wrong. 14,100 divided by 9637, wrong way. 9367 divided by 14,100. The delta is at 0.66, right? So our next puts that we're going to put into place are going to be, and I'm not selling this off, we'd actually add a whole nother set of puts in place, would be the 125s, right? Why is it not letting me grab it? All right, we'll do it a little differently. Go ahead and be difficulty trade. Why am I using April 3rd? Because I want something in place that I know I'm going to adjust before the April earnings. So I'm looking at April 3rd. Looking at puts. Why are you not working for me? Maybe because Bob Iger is already falling away. So at the money would be 128. Tomorrow it's probably going to be 126 or 125. Iger is resigning as of tonight. Shapex is taking over, so we're going to have another drop in Boeing or Disney tomorrow. At the money puts are roughly about $4.15. If you look at your snapshot analysis, where is our delta at? Our delta is looking at 0.58 for an at the money long put, which means if our current long puts have a delta of 0.66 and we buy new long puts with a delta of 0.58, how much money will we make to the downside? That is a question for you guys. And the answers are coming flooding in. The answer is $1.24 for every dollar down. That is correct. You take the $1.66 plus $1.58 equals $1.24 as the stock passes through 126. Next question. So what happens when it gets down to 120 on the stock price? All three of you, Dave, Lance, and Rich, awesome job answering the questions there. David W., I picked on you a little bit. It was a joke. You can stay living in Washington. Come and answer the questions. So what happens when it gets down to 20 or 120 on the stock price? That's an interesting conversation, right? I wish, let me see for a quick second. Let's see if I can do a better job. Why won't my computer? I need to do it this way, huh? Stupid. I'm gonna go 20, right? So right now we have an at the money at 128. Got it figured out, right? At the money at 128 shows us the delta 0.58. So if we go this way, right, our delta gets higher. If we go down to 120, 1, 2, 3, 4, 5, 6, 7, 8. We're going to have a delta of 1 at 0.83. So our one that's 0.58 at the money, well, it's going to start at, so it's only 6 actually. I'm sorry. It's probably going to open at 126 tomorrow. 1, 2, 3, 4, 5, 6. That one's going to be worth 77, almost 78 cents. So the 58 center becomes 77 on the newest. And because we currently have a position in play, right? Because we currently have a Disney put in place, Disney 131s. So because we have that in place, the 131s that will also go the full $8. 68, so we're looking at 1, 2, 3, 4, 5, 6, 7, 8. Those ones will be worth 89 cents. Which means as Disney heads to or touches 120, we make 0.77 plus 0.89. We make 89 plus 77. We make, at that point, $1.66 on every downward $1. Disney moves. Or in other terms, it increases. We go from making $1.40, $1.24 each dollar on the way down to $1.66. On a $6 movement down, you'll make up $3 that we've lost previously. So next question. How do you know when to add or take them off? Let's go back to Disney. Disney. So part of it comes down to support levels. Our first level and the last one that we're going to see on the 6 month is 126. We are breaking that. So down Disney's going to go. And I said, hey, it's probably going to go down to the 120. How did you figure that out, Kevin? Well, if we go out a little bit longer, let's add a year to this. You're going to see the next support level below that 125. It's actually closer to 115. So it'll probably go down to 115. That's where we're going to see Disney head down to. It's going to fill the gap that we had back in April. And filling that gap is actually probably more like 118. 118, 115, we're going to be in that range to fill that gap to the downside. So Kevin, what do you do? Well, if we see a bounce off of 115, I'll probably take off our 131s. I'll book a profit. If we see it go back down below 115, the ones I took off at 131, I'll add back on at 115. We'll still have the 125, 126s we'll be adding tomorrow. At one point in time, I had 3 of these stacked up on Apple back in 2008. Nothing better than making $2.06 for every dollar Apple fell. I think, and I've changed my tune, I think the U.S. stock market is screwed going into our earnings in April. It's going to affect us on food, on restaurants, on travel, on clothing, on electronics. We're screwed. So I'm looking at how I'm going to make up as much up to earnings. Reschedule earnings. We'll be in full callers for earnings in April. How I'm going to run that through to the June earnings before we run into election volatility. Now, another question was asked. What about the leaps? So, 2 things. Leaps already have protection in them. They run between 7 to 10% of your stock ownership. So leaps and using leaps in themselves are protected. Second, dollar cost average. And really, I'm looking to do it at half the cost or a third of the cost or a quarter of the cost. I can add single long puts to create a strangle. but it's been easier as I was just doing a little test, and most of you will see some of these coming back in. We'll probably use for those that have some type of more of a play long put wise, we're going to add bear puts or Keeve likes, and I agree, to QQQ bear puts. And the reason why is because the Qs move a little bit faster and it looks really smart at a 219, 210 bear put. Again, going to the 03 April 2020 expiration for about $3. So that's what you will also see put into some accounts to help make up some of the downward movement. And the short answer is we're probably just going to, well, I guess it depends how the drops are, but some we're going to cash in and roll into other positions. Keith just typed in as well. They're cheaper than the SPY puts, and that is true, but the SPY puts were nice today. 70 cents on those ones and 70 cents on the others. So we're going to start experimenting with ways to increase the protection on your stocks, on your portfolios, to reconstruct portfolios with better protection than what was on them now. The comment was made to me, was there anything I would have done different last Friday? And I tried to show you based on technicals and probabilities. If I could see into the future, I would have done things differently. And we made a run out this morning when the market was up to get some protection going, and off we went. We're going to keep that in mind because the fear and the panic that's coming on, if it made me worry today, if it made Keith worry today, it's got to make other people that are managing large sums of money worry like there is no tomorrow. A little kudos from the state SEC department in Utah. Pretty neat. Not looking particularly good, relatively speaking, but 737 on on 12, 13 million almost, right? So we did get a compliment. 737 divided by 12, 6.1% is where portfolios are down on average. And most Utah portfolios on average are down over 10.9% for money managers. Pretty interesting to get a compliment that what we're doing is smart and is working. When we missed a day, when all intents and purposes, we missed a big day on Monday. We were playing simple, SOL. So with all that said, between last night's commentary and tonight, what questions can I answer for you to help you understand where we're at and what we're doing? And Maud, I think you came in a little bit late. Since I'm not necessarily doing a trade today, although I am showing a couple trades that can be done, this will be posted immediately as soon as it processes, and this will be up within an hour or an hour after we are done today. But nice to see you here. I know you missed maybe the start of it. In fact, in all honesty, 28 of you now, For those that came in a little bit late, let's my Hurley investment. You can jump into everything that you may have missed. So questions. What questions do you guys have that I can answer for you tonight? How am I doing? Well, in one portfolio, I'm basically down 9%, so I'm sucking it. In a retirement portfolio, it's a little bit bigger. I'm down about 7.5. I take a little more risk than I put for you guys, so I am contributing more to the downside than maybe some of your portfolios are being affected right now. I'm also more leaps. I'm some smaller account, my smaller account, even my bigger one. More leaps, more trying to get explosive growth. Yes, Baidu has its earnings on Thursday, Lance. They've already pre-announced that they're going to beat top line, bottom line, and increase their revenue guidance. So you're probably saying, why did you add long puts on? Why are you looking at taking the profitable leaps off and maybe rolling those out into longer term? I'm doing that because Baidu could change their guidance, since that was said 3.5 weeks ago with the coronavirus. They could keep their guidance if things are getting back online in China. So my thoughts are, I struggle just gambling and letting things run, especially when you know their most volatile times is going to be at their earnings. Even though we know what the earnings are, I'm protecting for a guidance restatement. And yes, Baidu and Baba did not go down that much today, really because in their country, they're saying they're getting things back online. Their government, Chinese government also said, get back to work. It's contained. We're good to go. So China, in all essence, is getting back online. The how it affects Europe is going to be the biggest question, because that's the third biggest economy, in my opinion, behind U.S. and China. Open borders. Sucks to let people walk in and out of your country with the coronavirus, right? Good question. Questions, Lance and Maud. Hope I got those both answered. Are there any other questions? If not, I appreciate all of you being here tonight. Just as a reminder, just because something traumatic is happening in our markets does not mean that that you can't attend on the days that are not that way. Bigger attendance is always better. What else can I tell you? If you go to my YouTube channel, the Hurley Investments YouTube channel, and subscribe, I've got 7 or 8 short education classes there. I would like some feedback on them if you don't mind. We will be adding more there as we have time. But right now, we're actually bringing in newer money, and we're doing the best we can to make sure that things are getting taken care of. So guys, I appreciate you being here. I'll get to work on getting this up and posted here shortly. I appreciate you being here. And if any of this was gone too fast for you, it is 7 o'clock my time in 9 minutes. By 8 o'clock Mountain Standard Time, I will have this posted for you guys to review and to go over. Appreciate you being here. Hopefully this was a good one to better understand how we do and why we do it. Guys, let's see the bottom fall out. If the bottom falls out, that's only going to help us. And I'll be honest with you, when we have these type of movements and we're a little bit behind the 8 ball, the best thing to do is to be looking towards the future. I saw yesterday an individual take it on and off, on and off, on and off 3 times and lose money every single time. I also know someone that went to cash that's going to try to predict the bottom. With all due respect, I think that's absolutely asinine. But again, that's what you do when you don't have alternatives. when you don't want to be shoved into less than 1% bond fund that you have to stay in for a full year, that's what you do. You go to cash. It scares you out, which only helps the market go down. So if you have friends that don't have any way to make up some of the downward movement, that think they can predict the bottom, suggest to all of them to sell out and go to cash today, because it's only going to get worse in the next 4 to 8 weeks. I appreciate being here tonight. I'm going to get this posted for you. You guys have a good evening, and I'll talk to you later. Bye-bye.